Hello again, everyone. John Rosengard with Environmental Risk Communications in Oakland, California. Our webinar topic today is ASTM E3123-17, which is the brand new standard guide for recognition and derecognition of environmental liabilities. This document was published by ASTM International just last year after a year-long effort. I was proud to be the initiator of this effort and the chair of the task group that built the standard from January to August of last year. We completed the balloting and the publication process just in the last 30 days. By way of an outline for today's webinar, I'll be covering what the needs were for developing this standard, identify how we believe this standard guide helps liability holders and the supporting experts that work with the liability holders. I'll be running through in a little bit of detail the pre-recognition and post-settlement watch list formats, and discuss a couple of deployment ideas and cover some FAQs or Q&As that came up in previous deliveries of this webinar in the last 30 days. By way of background, I'm the founder and CEO of a company called Environmental Risk Communications. I'm the author of a software tool called Defender, which has one purpose only, which is to look at and forecast environmental liabilities. To that end, we've looked at about 4,100 sites, probably a little bit more than that now, and I've given roughly 100 talks on environmental liability subtypes, including asset retirement obligations, remediation liabilities, and so on. I'm also the ASTM technical contact for this standard, E3123 and E3173, disclosure of environmental liabilities. What does that mean? It means I've got a 5-year term that I'm just starting on, and you are welcome. And I'm happy to answer any questions whenever you call about these specific standards and about optimal ways for your organization to adopt the standards and comply with the goals that are listed within each of these documents. So again, keep in mind, if you ever need some direction, some help, 15 to 30 minutes, I'm happy to contribute my knowledge and share what we worked on in developing these standards to hopefully improve your company's program in managing your environmental liabilities. By way of educational background, if you need more detail about me, please look me up on LinkedIn, and we can connect and stay connected through there. One of the foundations of looking at recognition and derecognition of liabilities is having an understanding of the accounting rules that guide what is published or what is calculated as an environmental liability. And then nested in with that are the major federal environmental legislation and regulatory regulations that have been passed in the last 40 or 45 years. So on this graphic on the top half of the slide, I've got a review of the major federal environmental laws like Clean Air Act, Clean Water Act, Superfund, RCRA, TSCA, and so on. But on the bottom half of the slide, I've got major environmental accounting steps. In other words, improvements or increases in the duties rather of organizations that are disclosing, estimating, or otherwise making capital stewardship decisions around environmental liabilities. And what I just want to point out is environmental laws and regs got a jump start back in the 70s, but environmental accounting has been continuously evolving. With every year or 2 or 3, there being another major overhaul, rewrite, or new rule for organizations preparing financial records around environmental liabilities to comply with. So again, keep in mind that GAAP, the generally accepted accounting principles, have been playing catch up with U.S. environmental laws. Within the standard itself, we work with the known 5 definitions that are stated in generally accepted accounting principles. These definitions are more or less universal across different organizations that write accounting principles, whether it's FASB, which is the Financial Accounting Standards Board, GASB, which is the Governmental Accounting Standards Board covering standards for state, county, and municipal governments here in the U.S., and IASB, which covers non-U.S. based organizations, I guess to keep it simple, non-U.S. corporations. The 5 types that are out there are asset retirement obligations, environmental obligations like spill cleanups, Superfund cleanups, administrative consent orders, and so on. Commitments, which are normally leases, contracts, purchase and sales agreements, perhaps even PRP agreements. And then much smaller in dollar are the others like contingencies, which are often just legal claims, and guarantees, which are where transactions like financial assurance are accounted for. These 5 definitions are standard accounting terminology. They've been in place since at least 2009. There's nothing new I have to share with you about this other than these definitions are out there, and I'm simply the messenger conveying to you that they exist and that they've been available for your use for quite some time. Keep in mind a couple of rules about applying these. Apply to those small boxes at the very bottom of the slide. One, fair value measurement, having a weighted average instead of a no estimate. That's been the law of the land in the U.S. since 2006. So having a weighted average is a measurement method of several scenarios. That's been arguably going back to 1996. That's been in place, but was firmly reasserted in 2009. The standard tests that have been in place since 1975, that a liability's got to be probable and reasonably estimable concurrently. That requirement is still there for each and every one of these 5 types of liabilities. One of the challenges that we saw in looking at the 10K reports of different organizations is we saw that different types of liabilities were acting in different ways and behaving differently to spending. Here, for example, is a comparison between Chevron and Exxon's remediation liabilities. And in this comparison, you can see from roughly 2004 forward, both Chevron and Exxon's remediation liabilities have stayed within roughly a comparable range that they were in across that time period from 2004 to present. I call this the numbers going sideways. In other words, every year the liability holder spends money down to try and discharge the liability and adds back a comparable, if not close to identical amount back. And basically the round trip is complete. The number goes down, number goes back up at the end of the year, and the cycle repeats year after year after year after year. And as you see from the data displayed here, which is just a combination of published 10K data, nothing special about this, you'll see that this pattern has just been in place for a while. But I want to just draw your attention to the takeaways at the bottom. Look at the spending. Both Exxon and Chevron are identifying that they have roughly $500 million to $1.5 billion in remediation liabilities, but their spending to try and discharge that liability is noteworthy. They're both trying very hard to extinguish the liabilities, but again, they find themselves in situations where adding back, truing up, or increasing the provisions or reserves is necessary every year over the time period. So again, keep in mind, I know each of these organizations is spending $7 to $8 billion to try and get rid of $500 million to $1.5 billion worth of liabilities. That's how remediation has been behaving. Now, if we change over to another type of liability, environmental liability, asset retirement obligations, which are demolition, decommissioning, taking an asset that's at the end of its use service, you'll notice that the liabilities are generally trending up in one direction, and that's moving up at close to $1 billion a year, if not plus or minus 50% of that. So in other words, the numbers are, relatively speaking, increasing on as a significant percentage year after year after year, since the accounting rules were published for asset retirement obligations back in 2001. So again, 20 years ago, this type of liability didn't exist. Now it's being folded into the cost of doing business as a type of environmental just recognized from scratch. So again, keep in mind that what investors normally like to see is liabilities going down, or liabilities at least flattening out. But keep in mind that over this time period, Chevron and Exxon both were and continue to be heavily investing in their business to the tune of capital expenditures in the range of $15 to $40 billion per company. So with that sort of aggressive capital expenditure investment, it's no surprise that the asset retirement obligations to take those new investments out of service someday are accumulating as well. But again, I draw your attention to the note at the bottom. Look at the rate of spending. Chevron settled over $11 billion over the time period. Exxon settled over $9 billion. So not for a lack of effort to try and flatten out that curve or even decrease the aggregate amount of liabilities. But you see, in spite of very significant spending, this type of environmental liabilities continues to increase. Another issue that we saw driving the need for ASTM 3123 was detailed versus minimal disclosure. Here's an extract of the 2016 annual reports of two different companies that are roughly the same size. The top half, you can see more or less a heavy level of detail about where spending has been occurring and where money has been going over the last 3 years. Contrast that in turn with the rounded numbers and some boilerplate language that's stated in the bottom half of the slide with another company. Both of these formats, both of these explanations, both of these sets of narrative are adequate. They're both accomplishing the purpose that they're designed for. What's problematic is you could more or less track, measure, management on a quarterly basis from the graphics that you see on the top half of the slide, whereas the bottom half of the slide doesn't really inform individual tasks or actions or give a sense of where the long-term trends are going to be in 5 or 10 years, the way the data on the top half of the slide does. We felt that was a pretty significant gap and a pretty common one across many of the companies whose 10Ks we evaluated. With that, I just want to step back to one of the final reasons we saw for looking at environmental liabilities in a more systematic manner. And that's the pattern that we saw with one company displayed here, where they're spending roughly $100 million per year on remediation and then adding back roughly the same amount, $100 million a year, back to their reserve. So in other words, it's a round trip every year. $100 million out in spending, $100 million back in as a new reserve charge. The way the organization values that absolute liability, though, is at around $500 million over the last 22 years. In very few, very rare circumstances would it be appropriate to step back and say, cash flow of $100 million in and $100 million out equals a $500 million liability. In fact, if you do some other calculations with things like pension assumptions or dividend assumptions or even paying the interest on bonds, you come up with fair value measurement approximations or proxy values in the 1.5 to $2.6 billion range. So in other words, we see that there's a significant material difference compared to $500 million that's explicitly stated as the value of the liability. With that in mind, let's move on to why we saw E3123-17 being needed. First of all, the existing ASTM standards covered the assessment process very well for the last 10 years now. And we still see that environmental liabilities are still increasing. So again, even with good standards, we're seeing that material restatements and material reserve increases are still happening and still still necessary. Accounting definitions are also proliferating, as I noted in the second slide of my presentation, that we've got more GAAP rules than ever before. Finally, we saw that there was a need for addressing some of the topic breaks in the existing suite of ASTM standard guides, namely between assessment, measurement, presentation, and disclosure. We saw there being a need for basically identifying, do I or don't I have a liability, which is the recognition step, and then at the end of a project life cycle, derecognizing an environmental liability and in a sense taking it off the books. So how do we think this helps our liability holders? Well, foremost, we think this helps walk the talk on GAAP compliance, make sure that there's the use of best practices, best principles, and lessons learned to improve the proper use of current accounting principles and risk management. We also see that M&A activity, litigation, cost recovery, site cleanup work, it never is easy and elegant to recalculate environmental liabilities. And so we saw mergers of portfolios of liabilities creating these measurement disparities between how liabilities used to be measured under one management framework and how they would need to be going forward. The other major reason, I'd say actually the most important reason for developing E3123 was to improve capital stewardship, to reduce the surprise of the aggregate liability and any increases related to that, to try and match budgeting. In other words, the rate of spending to work down the liability to the aggregate liability itself. having a 100-year number or a 2-year number set aside in a reserve means either many, many fewer or many, many more trips to true up a reserve at the end of the year. And again, we think there's a balance to achieve there. Foremost, I think as well, it's important to optimize cost recoveries in cashing out or cashing in to certain liabilities by understanding what the true life cycle cost is on a fair value measurement basis. Finally, we saw utility in improving that connection between spending, tangible liability reduction, and of course, maintaining institutional knowledge about sites that close but have some probability of reopening. For supporting experts, we think it's really important to use common terminology that's already been set out in accounting principles to work with improving decision quality, improving the procedures to measure and manage liabilities, and then connect assessment findings from ASTM E3123-17, for example, to liability recognition initially, and then ultimately to liability workdown and derecognition. Here, very briefly, is the outline of the standard guide. We've got roughly in section 3.5 pages of detailed terminology, several detailed pages on significance and use of this the standard and how it can be applied in your organization. And then the core of the standard itself is the recognition and derecognition process set, and then the content of recognition and derecognition reporting. I'll be really skipping ahead to sections 7 and 8 here in the next part of our presentation. The general framework that you'll see on the current slide for the environmental liability lifecycle is normally a project or an environmental liability starts out on a pre-recognition watch list, moves eventually to the recognition step, which means liability accrual or booking a liability or placing it in the financial statements of the company, and then moving on eventually, perhaps not urgently, but eventually on to the settlement steps and process of work or spending or negotiations. So again, construction work, financial events like cashing out of a site, and then negotiations with environmental regulators. That in turn leads to the ultimate step of extinguishment and derecognition of environmental liabilities, which is followed close by with the post-recognition watch list, identifying what residual liabilities are still left. Keep in mind, we work on the presumption that environmental liabilities never truly are resolved down to the zero value, that's something that becomes clear in the fullness of time. Just a little bit on how the recognition tests look and function. We built for each of the 5 liability types a 4-step process. And the 4-step process is just laid out here in sort of a herringbone pattern where we ask each user to identify their accounting framework, which is laid out from higher up in an organization, identify if there's an asset in service or an environmental obligation in place or a contract contingency or guarantee. And then the next couple of logic steps. Will there be an activity that involves spending, and is that spending and its associated timing known or unknown, and to what extent? The following slide is directly taken from the standard. It's from, again, Table 1 in E3123-17, and it's an example of a pre-recognition watch list. Our next slide is called Table 2, the post-settlement watch list. So you'll see a highly similar version of this in a moment, too. But the basic idea is we found through trial and error that these 7 different columns really do help with knowledge retention and describing the status of an environmental liability today. So the first column, moving left to right, is one of the 5 types, like asset retirement obligation, commitment contingency, so on. And then a site-specific definition, not meant to be conclusive or comprehensive, but simply to remind any user that the numbers are, the valuation is based on a specific set of issues and not just a general overview of the next 2 columns we think are pretty pivotal to knowledge retention, which is documenting the past obligating events and past recognition benchmarks. In other words, is a liability probable and is it reasonably estimable? Those are the rough tests. We have, I think, roughly a dozen examples of obligating events and recognition benchmarks to work with. And then the 4th column, moving left to right, is a key future obligating event and or recognition benchmark. We think filling out these first 4 columns, left to right, these 4 columns helps enormously with institutional knowledge management and revisiting the status of a given environmental liability over time. The next three columns over on the right half of the graph are assumptions for expected value calculation, not always indicated, not always even possible. But we found through trial and error, again, that the probability of that future obligating event or recognition benchmark occurring is an important metric to at least be aware of, if not actually estimate. And then the range of dates and the range of expected costs enable a calculation of an expected value based on those three factors. And it's a fairly straightforward mathematical exercise within Excel to document a watch list in this way. And again, it's a tool that's we've seen used and applied through a variety of portfolios over the last 18 to 20 years. For post-settlement, the following example really describes the differences in what has happened. So again, moving left to right, the first four columns are very much the same. The type of liability, the definition, the past and the future obligated events and recognition benchmarks. But note the fifth column moving left to right, the probability of a future recognition benchmark is quite small compared to the previous. Displayed intentionally, because that's the experience I think each of us have intuitively, is that reopeners for a site are less probable than the initial activity. But again, stating professional judgment and stating what the probable or possible values, range of values for a reopener or like, is an important part of the discipline we think of building knowledge management over time. For deployment ideas, I just want to give you a couple of thoughts about how we see ASTM 3123 being used by corporate and public sector agencies that are building up forecasts of environmental liabilities. First of all, we recommend a pilot program of roughly 3 to 12 months to point toward a key deliverable like a next reserve review meeting. And we recommend taking a look at 3 to 5 active cleanup sites and 3 to 5 closed sites. We think it's useful to have both of those stated and characterized with individual watch lists so that users are able to, again, see the type of progression and type of knowledge retention that can be stated and clarified through the watch list tool. After the watch list has been tested and developed for roughly 6 to 10 sites, we think it's important to take a pause, confirm endorsement of the environmental watch list process, and make sure that reserving and provisioning is going to be aligning with any updates to a company policy on building or not building a watch list. Because some of the data will be confidential, highly confidential, or even not disclosed, teams from legal, finance, and audit likely will need to be brought on board about where and how to apply a watch list and how to keep privileged data privileged. Another part of endorsement will, again, maybe making sure that the resources are available to revisit the portfolio. I recommend a 3-year cycle for revisiting every site, frankly, in part because environmental liabilities don't move very, very quickly. Some of them actually take, of course, in the case of multi-party settlement sites, can take a decade or more to play out. So revisiting every site every 90 days is an excess of effort, but finding that balance of what sites do need to have frequent updates versus what sites can be left alone estimate-wise or watch list-wise for 3 to 5 years is an important learning exercise. Normally, the cost to deploy 3123 will be spread out among existing reserves and be an important part of calculating the proper valuation method and the proper valuation entries that go onto the books of a company over time. In other words, it's a good forecasting tool for future reserve increases. For specific resources to read, I just want to point you to the FASB.org website, or if you're working for a public agency, the GASB.org website. Free registration. It's never been easier to get a copy of these documents and to review them online. If your organization or you personally subscribe to ASTM standards, I recommend taking a look at all three, not just the one that's the topic of today's presentation, but taking a look at all three. Your organization may already have low cost or no cost access to the standards that I've indicated there. Just to sum up our presentation for today, the goals and uses of 3123 are to provide tactical guidance and help you close the gaps with a best practices analysis, to build more reliable liability forecasts, also to improve capital stewardship. It's a skill you'll have to build over time, to prioritize and reprioritize continuously on how you're balancing your spending among asset retirement obligations, other environmental obligations, commitments, contingencies, and guarantees. A less concrete reason, but again, a useful reason nonetheless, is to improve compliance with GAAP. It's not the foremost reason that you're doing a compliance activity around 3123, but it is a bonus that comes along with it. And you're also retaining institutional knowledge by documenting in a format, in a structured format, information that may have been lost to employee turnover, vendor turnover, and just the long-term passage of time. Some issues that you may come up with in applying the standard, you may find that your company's environmental liability policy or reserve setting policy, in other words, how you do the work of valuing environmental liabilities, it might be out of date. You won't be the first person who works for an organization that has some gaps to close. What we're trying to do with the standard itself is we're trying to identify gaps that we think can be closed with, again, a sharing of best practices and lessons learned. Keep in mind, in turn, that external auditors expect zero surprises, and if you identify a rash of new liabilities, those are generally going to be termed surprises, so there will be some curiosity about why liabilities are being recognized now. I again encourage the adoption or the prototyping or the testing through a test exercise of 3123 be put up as a justification for confirming that the reserves that are in place are valid, accurate, and reasonable, but that a watch list will provide a leading indicator, not a current indicator, but a leading indicator of where reserves will be in the near and far future. Keep in mind, your current indicator of environmental liabilities is the balance itself. So anything that distracts from that, like a watch list, is going to be highly sensitive information because, in a sense, it's competing information. Just a couple of reviews of questions that have come up. I see we're all caught up on questions here in today's webinar, but I just want to share some of the questions that came up in previous deliveries of this webinar. Number one was, why was this standard developed in 2017? We think it fulfilled a triage need to answer the very straightforward question of, do I have this liability now or don't I? Who developed the standard? I initiated the activity through the ASTM E50 committee. We had 29 active participants, which is over 10% of the current E50 committee membership. And we wrote the standard over January to August of 2017. The participant group was a mix of environmental consultants, attorneys, representatives, employees of manufacturers, and we received roughly 10 sets of. We received only unanimous. We received no negative ballots. All ballots were unanimous, which is unusual, but it also helped us keep the abbreviated time frame of building a standard within 8 months. How and where should I adopt 3123? Number one, no substitute for getting a copy and taking a read of that and identifying what sort of gaps you'd like to close in the coming 2 to 5 years. Some of those drivers for gaps you want to close, you may find that your reserve policy might be out of date. You're noting some audit deficiencies, or getting poor recoveries from insurance claims, or dealing with a spinoff or a major acquisition. We recommend, in turn, for adoption, a pilot effort of roughly 3 months, maybe even longer, and then seeking endorsement from the value chain of financial auditing, legal, EHS operations, and so on. We think it's perfectly fine to outsource some training, but it's never going to be possible to outsource the thinking on what constitutes a good watch list. We think a rollout for an ordinary public agency or company today with over $50 million in environmental liabilities would be to have a 3-year rollout in order to standardize tools and procedures and help estimators get up the learning curve and see what are good ways of documenting environmental liabilities. We think over the long term, this does need to convert to an evergreen effort where numbers are updated on a symptomatic basis every 90 to 180 days with new and closing sites and new recognition benchmarks and obligating events. Finally, our last set of questions: should auditors take a look at this? Generally speaking, no. It's a competing set of books in a sense, but it's really just a leading indicator versus the current valuation. And the leading indicator has far more suppositions, far more uncertainty, and we think often look backs on single sites or look back on transactions like a major merger or acquisition is reasonable to talk about aligning the recognition steps with the transaction itself, but generally speaking, it's probably not useful. Next, is it useful to publish an aggregate watch list value in a 10K? It might be, to give a sense of, again, what the leading indicators are saying. And then finally, what are the triggers to changing loss trust valuations? Two simple terms: new and updated recognition benchmarks, so we give roughly a dozen of those examples, and new and updating obligating events, and we give roughly a dozen examples of those as well in the standard. Is consistency among team members a common issue? Absolutely yes. But training and reinforcement, we find, as well as the structure of a formal watch list, offset the tendencies to improvise. Why is the range useful to the watch list process? It's always important to convey that lack of precision or the lack of current knowledge in looking at environmental liabilities. Just to close for today, thank you again for joining us. If you have any questions or want some troubleshooting or one-off advice, feel free to email or call. We'd love to hear from you. Keep in mind, again, I'm the technical contact for E3123, which is the disclosure standard, and E3123, which is this recognition and derecognition standard. I'll be posting a copy of today's webinar up on our YouTube page. And again, you're always welcome to listen to those recordings by searching for them on the YouTube homepage. I find that looking for the term asset retirement obligations usually brings us up in the search results pretty quickly. With that, thank you for joining us for our webinar today. Appreciate your time and attention.